Okay, here's the setup. The Fed is going to cut rates, but now the debate has shifted. No longer are all rate cuts good rate cuts. And I want to explain what I mean by that, because if the Fed cuts interest rates to stop a slowdown in the economy, it's very different than if the economy is crashing and the Fed is trying rapidly to fix something that has broken. Those are two very different scenarios. And in today's video, we're going to talk a little bit about each one of those scenarios and where I personally think we lean. We're going to talk about some of the signs that the economy is slowing that I see. We're also going to talk about where I'm positioned and so much more. Let's jump in. Welcome back to the channel, guys. My name is Nick, and if you are new to my channel, I want to invite you to subscribe. If you're looking for more practical day-to-day market analysis, I talk about everything from indices, commodities, and currencies all on this channel, and we focus heavily on the macroeconomic data because that is truly what I believe drives the markets. There's a big reason why big news spikes cause such big volatility. It's because the market and the higher ups in this market, the big hedge funds and smart money, is paying attention to the macro story. What are the economies of the world looking like? What are they likely to do next? What are central banks going to do? And how is that going to inject money into the system or pull it out of the system? These are the forces that really move prices around. So we do our best on this channel to try and gauge all of that. Now, I want to talk a little bit about what we've seen recently. Recently, we've seen a sell-off in stocks, tech stocks being hit the hardest. We also see other areas of the market selling off as well, though. Here's the S&P 500. And if we break it down by sector for just a second, you've got semiconductors getting hit very hard, technology getting hit hard, the comm services, utilities doing okay. What we see here is discretionary getting hit hard. So my point with showing you all that is we've seen a recent dip in the stock market. And it's because, well, there's a number of reasons why people are claiming that it could be. There's election uncertainty. There's the economy slowing down. There's the consumer starting to really feel, caught between a rock and a hard place with inflation being high and interest rates also still high. There's an interesting story playing out here. In today's video, I'm going to be breaking down my thoughts on the dollar. We're going to look at gold, we'll look at indices, and I'll break it all down for you best I possibly can. So let's actually start here with some of the data. Now, jobs data has been cooling, not crashing, and there is a distinction there that I want to discuss. But as we approach September, which is when the Fed expects to cut interest rates, I'll show you that now. The market expects the Fed to cut interest rates in September. In fact, you can see on the Fed watch tool here that there is a 100% chance that the Fed will have eased by the September 18th meeting of 2024. Now, I caution anybody to think anything is 100% in the financial market. So just take that with a grain of salt. This is what the market thinks, not necessarily what is guaranteed. So we do see, however, a shifted probability that we are going to see our first interest rate cut by the September meeting. We also see that with the July meeting, which is happening next week, there is a very small chance that we do see a rate cut by then as well, just about a 5% chance. So not very likely. However, here's the thing about September that I want to really draw attention to. We're expecting our first rate cut. We're currently at 525 to 550, right? That's kind of where we're at. So if we come down to this figure, 500 to 525, that would be our first rate cut of 25 basis points. But what I want to draw your attention to is that we're probably going to see rate cuts, but the question now is, are we going to see 50 basis points or 25 basis points? Now, again, a bigger drop would tell you something interesting, in my personal opinion. If we see a single 25 basis point rate cut in September, I don't think it's too threatening. I think the economy has shown signs of slowing. I think the labor market is cooling off, and we're probably due for a rate cut in September, in my personal view. But if we see two interest rate cuts in September, which the market is now assigning about a 12% chance that we see 50 basis points, which is one rate cut, but a bigger one. If we see a bigger rate cut of 50 basis points in September, we are now looking at something that draws a little bit of concern into the picture, which is, Are we rate cutting to stop a serious slowdown or potential recession? Or are we cutting interest rates because the economy has modestly slowed? These are two extremely different scenarios that we need to discuss. What happens if we see 50 basis point rate cuts in September? Is that the Fed trying to catch up to try and stall the economy from rolling over? And 25 basis points would argue, or I would argue, is more like, hey, you know, we've seen some progress in the inflation. We've seen good progress in the economy, you know, modestly slowing, but not crashing. 25 basis points is appropriate. This, in my opinion, is good scenario. This scenario makes me a little nervous because, again, if you're ratcheting up interest rate cuts much quicker suddenly, that tells me maybe we stayed too high for too long and the economy may be starting to really roll over. And the thing about the economy is once it really starts to roll over, it's hard to get it back up and running, right? That's the thing that the Fed is also nervous about. Now, I want to show you some more data because I know everybody wants to look at the charts, but bear with me. This stuff is really important. The labor market has also been seeing an upward trend in unemployment rate. We've come off of our historic lows, and I know I discuss this regularly in my videos, so if you're a regular viewer, then I apologize, but let me get through this because it is important to consistently mention this point. Next week, we get NFP, and we're going to see the latest unemployment rate. We're going to see the latest jobs numbers. And here's what I personally want to see for this soft landing, meaning we get the Fed to cut interest rates without things breaking. That's what a soft landing is. If we're going to see that, this is what we need to see next week. It's huge. Next week's jobs data, in my opinion, is very, very, very important to what happens next. Because if you get unemployment rate steadily rising, that's okay, but we need to start seeing interest rate cuts to slow that and not turn it into an acceleration effect. Accelerating unemployment would be scary. So the other side of that is we have NFP next week, as I mentioned. I would like to see, hopefully, under 300,000 jobs created. Now you might say, well, Nick, don't you want to have like everyone getting employed? Yes, but we don't want inflation to get back into problem scenario. That would be the worst case scenario because if inflation starts to really accelerate, no bueno. Okay. So my point with that is we want to see jobs data come in good, but not insane, because if it comes in insane, inflation is going to tick back up, and that's not good. Inflation has been unemployment or jobs being strong has been a driver of high inflation. We need jobs to not come in bad. We don't want like a 100K. We just want like a somewhere 200s. That's good, but we don't want over 300. In my view, this is my opinion as always with these videos. So, we're going to watch the economic data next week very close. We'll be live streaming that event, so make sure to stay tuned. Here's a current look at our top setups page. I've just sorted this by, taking out the minor currency pairs because I personally don't trade them, as well as excluding neutral readings. And this is what we're left with. I am already long the Dow and the NASDAQ, and I'm watching a couple charts here, the Russell, dollar, CAD, Bitcoin. We'll go through all of these watch lists today. That's what we'll do in this video. Now, before I push on, let me just mention to viewers who are watching, if you're somebody who regularly tunes into my content and you like the breakdowns and the charts that we pull up on the streams and videos, I want to just let you know that we are currently doing a 50% off discount on the Edgefinder. And for viewers of my channel, using the first link in the description down below, that first link will get you a chance to get actually 55% off the tool. Now, the reason we do this is it's a live chat link where you can speak directly to a member of my staff on our software team. The reason I do it this way is so that if you have questions or you want to make sure this tool is right for you before you purchase it, this is a great way to discuss with a member of our team, and you get an extra discount by chatting them. So click that first link in the description down below, and let's get you a copy while the discount lasts. This is our biggest discount of the year, and it is ending soon, so heads up. So let's go through these. First, we'll talk about the Dow Jones. As I've mentioned, I am already long the Dow, so let's have a look at how that trade is going so far. I discussed it yesterday in my video. Also, let me close some of these tabs. Here we go. We'll go over to the Dow Jones, and we can see this one is having a rock star day, driven higher by MMM, which is the 3M company stock, and you can see it is up a whopping 15.37% on the day. I don't know what they're doing over at 3M, but this is a boring company, so for it to be up 15%, something good must have happened. 3M, actually, Chandler, can you pull up some images of what 3M makes? I believe it's like paper towels and really boring stuff, but 3M makes a bunch of health technology stuff. It's in the medical specialties. it's a boring company, but boring companies are sometimes the greatest place to invest. Anyways, we do see the Dow Jones up today. I took a buy on the Dow yesterday. So if we go take a look at DIA, this is my current position on the Dow Jones. I picked up this trade. And we'll pull up the US 30, the spot price here. Take a look at this. So we hit resistance, and then we broke out, and I waited for this thing to pull back, and it did. It came all the way down to my level, and we were able to get the buy trade going. And look at that baby go, 1.36%, actually outperforming the S&P and the NASDAQ today, largely in part due to that 3M exposure that the Dow Jones does actually have. There's only one more, even more impressive, and that's the Russell. The Russell is flying high like a rocket ship right now, and the FOMO's kicking in for me because I don't have the Russell in my portfolio, but congrats to those of you guys who do. Many of you might be trading things like IWM, which is the Russell ETF. Bam, that thing's flying high today. So I like the Dow. And why do I like the Dow? I like the Dow because the Dow is full of dividend stocks, which will look more attractive if interest rates come down and bond yields are lowered. Remember that bonds, which I am also long, TLT, I think that yields for bonds will go down. And remember that if yields go down, bond prices typically move up. So we've seen a little bit of momentum starting to build for bonds, and I do like TLT to the long side. I've had this position in my portfolio for some time, and we'll just let that one run. So we'll continue to watch that. But again, back to the Dow for a second. Big push off this level. My level of support here did seemingly hold very well, especially with 3M coming out real strong today. So as long as we stay above this level, I'll stay in the Dow. If we break back down and we fail out here, it's going to be my signal to take profits. Or I'm sorry, not take profits, take a loss on this trade. Otherwise, if we keep pushing higher, I may get a chance to trail my stop into profit and lock in some gains on this one. So nice move there for the Dow. Next up on our list is the dollar against the Canadian dollar. Let's talk USDCAD for a second, and let's pull this up. USDCAD is, let's see, breaking out of this resistance. Actually, this looks really promising. So the dollar against the Canadian dollar has been range bound for a hot minute here, but with this big break above, that is really promising, showing dollar strength here relative to the Canadian dollar. And if we get that pullback, this might be a trade setup for me. So I'll keep an eye on USDCAD. Next up is the Russell. It is getting a bullish reading, but I haven't had a chance to get a pullback on this one going. So let's go take a look at the Russell, which I discussed earlier, but we'll bring it up just a second. So I was looking for this pullback to come into play. The Dow set up, but the Russell did not. So I didn't get that pullback. With this kind of higher low forming here, if we do get a double back into this area, I may need to more seriously consider just going ahead and finding a good buy setup down in this area. So I like this little flag pattern. We very well may, to be completely honest. It does look like it wants to just break through these highs and keep going. And if it does, maybe I'll look for a retest of that support zone that could form at this past resistance. But small caps look really strong right now. Next up, we'll take a quick look at Bitcoin. So Bitcoin also found support, and I didn't catch this buy entry. Again, I hesitated on this one, and before I could really make up my mind on whether or not I wanted to buy it, it already was shooting back up. So the Bitcoin market looking really strong here as well. Momentum seems to be forming. If we break out and take out these highs, this might be a breakout and retest opportunity for me on the long side. Next up is the NASDAQ. We'll take a look at this one, which I am also already long on. So NASDAQ not working out as well. We're still slightly in the red on this trade, but still holding support, and I don't mind this trade as long as we do continue to hold support. If we break out of this level to the downside, I'll take a stop loss on this one, and if we can push higher off this, then I'll look to try and manage the trade from there. Pound USD, this is a trade that I've been looking out for. I want to see what the pound is doing on a price action standpoint, and you can actually see it is coming back into support. So this one looks like I might take a trade on it. So I'll keep an eye on the pound US dollar. If I do take this trade, it will be shared inside of our Discord channel with all of the details. The Discord can be found down below in the description. Finally, NZD USD. This one has been selling off of a cliff recently. So if we pull up NZD USD, we can see again a huge drop off on this one. I'd be interested if we see a break through those lows. I also wanted to offer a little bit of an update on my thoughts on gold, because I know a lot of my audience is very gold centric in their trading, and I've been trading it a lot recently, but now I kind of have a neutral reading on gold. I want to discuss this. So we topped out. I actually put this in our Telegram channel, which also can be found for free down below in the description. I put in my Telegram channel here this morning that we've kind of come back into this consolidation zone, and that just is not very enticing to me. Also, the Edgefinder dropping it from a bullish reading tells me, okay, I don't really have the confirmations that I'm looking for at this time, and so I'm going to pause on this one. What I'd like to see is, to be completely honest, what generally makes gold very bullish is some sort of geopolitical tension or some uncertainty in the world. And while the election is an uncertainty, there's also, kind of there's just not quite the same momentum that we've been seeing. So I'm more interested in other things right now. I do think that gold will generally continue to trend up, but it might be more of a slow chugging trend for now, because I do think the Fed will cut rates, which is bullish for gold, but it's not the same as the Fed's going to cut rates and the economy might fall apart and geopolitical tensions are elevating constantly. Like, that's a scenario where you get gold moves like this, and I just don't see that right now. So I'm waiting for a chance to get more interested about gold. I'm still bullish overall. I'm not bearish on it. But I don't see a level right now. I don't see momentum, and I'm going to pause after taking my trade here. I made really good money on this run up. I trailed out, and then I tried to re-enter, and I took a loss on that one. So that's just my signal that maybe the time is not right now for me to continue to be bullish on gold. I made money on this one a lot this year, but I'm going to put it to the side until another opportunity sets up. So remember, guys, if you want access to the Edgefinder, that discount 55% off can be found by clicking the first link in the description. Thanks for watching. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.